Jim Rogers was spot on in 2013, saying he was sitting on the sidelines waiting for a further correction to start buying gold again. Rogers also said that he was not selling a single ounce of his gold, which shows that he is still long-term bullish in this market. So let's see what Mr. Rogers is saying for the start of 2014. Legendary investor Jim Rogers predicts that as a response to significant drops in gold prices, the precious metal will experience a short-lived covering rally. So this is from dailysilverupdate.com. I'll put the link below. So it's overdue for a rally. We had a big drop in 2013. Everyone got negative. Everyone got short. Last year, the high anticipation surrounding a tapering of quantitative easing policy by the Fed brought forth a decrease in investor inflation concerns and ultimately increased the overall sale of gold. Recently, this precious metal has experienced tremendous growth potential with its longest streak in over a year. But these trends will not last long, and after the rally, the year will see it going down again, and hopefully, finally, we will make a nice bottom and we can buy gold again. Mr. Rogers admits his preference for the value of gold over silver. Despite this preference, he has chosen to seize all gold and silver purchases, stating that he won't buy just because they are down. So Mr. Rogers is an extremely disciplined investor, even though he knows the value of gold and the value that it holds in our current economy and society. He's not going to just buy it just because it's down from its peak. He's looking to buy it at not the bottom, but once it's closer to the bottom and it's ready to start continuing in its bull run. So a lot of people say gold is in a multi-decade bull run, and what we've just been seeing over the past few years is just some rest period from this multi-decade bull run. So as we know, gold went up 12 years in a row, which is completely unusual for any asset class. And what goes up must come down. Nothing can go up in a straight line. There's always going to be people who need to take some profits and take some money off the table, because a lot of people got extremely highly invested in gold and other assets in 2008, 2009, when we had the financial crisis. So to see gold going from 800 to 1900, it's no surprise that there's been a lot of people taking profits, and obviously the media coming out and telling us that we're living in a in a recovery right now. So the economy is recovering, which is what they're saying. Now, there are a lot of signs that the economy is getting better, but there's also a lot of signs that the economy is not getting any better. So this is still to be determined in the months and years to come. Mr. Rogers, as I said before, is still not buying gold, but he's getting closer to believing that we've found that bottom. So he says we could see a short covering rally. Maybe this double bottom here is going to provide us with that liftoff point for that short covering rally. But he also does believe that we will fall back down and possibly even come down to his call, which is a 50% correction in gold at around 950. So I also posted some other videos down here from Jim Rogers, including his current investment strategy and some other great videos in this playlist down below this article. So as I said before, dailysilverupdate.com. I'll put the link below.